So this year, and I'll quote North America numbers, we're going to build about 345,000 Class 8 vehicles in the space. In 2020, that number is going to decline to about 245,000, so it's about a 30% drop.
Welcome back to FreightWaves Radio. I am John Kingston, and I'm still at the ACT Research Seminar in Columbus, Indiana, and I'm here with Steve Tam, who is a Vice President of ACT Research, who has been on stage quite a bit of the day. I think, though, for me, what I found most interesting were your presentations on the used truck market. I think when you had these enormous numbers of new tractors being ordered, the expectation was that this market was going to come plummeting down someday. That as all this new equipment hit the road, what was going to hit the the used truck market was going to be pretty severe. Where are we in the scheme of things?
John, your expectation is exactly what we thought as well. If you rewind to our seminar in the spring this year, or even the fall last year, we were sounding the warning drums that an accumulation of inventory in the medium duty, or in the used truck market, was really going to have a negative impact, driving values down. The reality is that there was enough growth in the freight markets that truckers were actually reluctant to trade, even if they were able to trade. And so they were growing their fleets to take part in that bigger freight pie. We still think, as freight continues to slow and rates continue to come down, that we will see an influx of inventory into the used market, but not to the degree that we had initially. So the negative impact on pricing won't be as detrimental. Probably flat this year, and probably down maybe as much as 5% in the 2020 timeframe.
But 5% doesn't sound like much in a market that everybody anticipated was going to be flooded with supply.
It doesn't, but it's how that 5% comes to fruition. So at the beginning of the year, we could be down as much as, say, 20%, and then by the time that we get to the end of the year, we're back up 20% or more. So it depends on the cadence as we move through the calendar, but it will also depend on how the economy reacts going forward.
There was a presentation earlier in the day before you and talking about used trucks, and one of the statements was that used trucks, let's say 10 years ago, 12 years ago, would really collapse in value in a market like this because it just really had not kept up with technology. The trucks that are being sold today that maybe are a model year 2012, 2013 vehicle are significantly better in quality than, let's say, they were 10 to 12 years ago. And that at a lower price, as prices start to fall, they can be turned into a pretty good vehicle for an independent owner or operator to have their own truck. Do you see that as well, that trend?
We sure do. I think the reticence to adopt the older equipment that earlier presenter talked about was folks trying to avoid the 2007 emissions trucks. They pretty much did everything they could to delay buying or buying into those trucks. But we're past that stage now, and you're absolutely right. And it's not just the quality of the trucks, it's some of the safety features that we're starting to see on the trucks, as well as improved fuel economy. For me, and I think for the used truck buyer, that's really the clincher. If you're in a truck right now that's getting 6 miles to the gallon, and you can buy a truck that's going to get 7.5 miles to the gallon, fuel is your number one expense. So you're just putting money in your own pocket by upgrading.
One of the other points that was made, I think maybe you made it as well too, is that when trucking companies are flush with cash, as certainly they were last year and into this year because of the strong freight market, they would rather spend it on capital investment than just pay it out in taxes. Of course, the capital investment being deductible. Was that a big factor in driving that market last year? They were so flush, so they figured rather than invest or rather than hang on to it, let's buy new equipment. And I mean, is that a good strategy?
Well, I don't know if it's a good strategy or not. It tends to make for higher highs and lower lows in this marketplace. So it's what defines the cycle in large part. But the opportunity to make money, I think, is certainly what was driving the strength in the market last year. And there was just such good freight growth and such an imbalance of capacity to handle that we just kept adding capacity, and we're still adding capacity, which is going to be our death knell, unfortunately.
Well, numbers are always tough to do on radio, so
yeah.
I'm a little hesitant to ask this, but what are you seeing in your research on the rate of depreciation?
So at this point, what's been happening, let's say over the last year and a half, is we've had below normal depreciation in trucks. We typically, in a strong market, expect to see about 1% per month of depreciation, and that's kind of right about where we've been. When the market gets flooded with extra trucks, you're going to start to see them depreciate faster, maybe 1.5%, sometimes as much as 2% per month. So we've been kind of skirting that depreciation curve, and that's what's held up the values.
Could it be that one of the reasons it's being held back is simply because the trucks are better? Do you think the quality the quality stops the depreciation from being normal levels, or at a certain point there's just a supply and demand overcome that?
In the data that we see, it's hard to control for that and to understand what the true impact is. I would say it's certainly a contributing factor, but I think the stronger factor is really the supply-demand imbalance. Even as recently as March or April of this year, we were in an inventory shortage situation, and so that's I think the stronger factor in terms of sustaining values.
Now, there's been a lot of talk here. I don't think you made a presentation on this particularly, but certainly your colleagues have, on the rate of new builds. And the highs were very high. The lows are not really being viewed as going to be very low, but when you're coming from the level that they were starting from, it's really a tremendous fall. Where is the bottom on this?
So this year, and I'll quote North America numbers, we're going to build about 345,000 Class 8 vehicles in the space. In 2020, that number is going to decline to about 245,000, so it's about a 30% drop in terms of the number of units that are going to be produced. But part of the solace in that is that 240 is sort of normalized demand for the space. So the moral of the story is, hopefully they've salted away some of that profit that they made in 2018 and 2019 from the elevated market to sustain them in the normal market that we expect to see in 2020.
I would expect that you really can't get to a normal market if you were getting a lot of cancellations, and from what I've heard is that certainly the order books are not growing the way they were growing, but the orders that were placed are basically holding, that the companies are picking up what they ordered. Was that what ACT Research is finding?
Absolutely. Each of the OEMs tells us, on a monthly basis what their order cancellations have been, and they have been very, very restrained. We had a couple months where we saw spikes in cancellations, but when you consider how many orders we have on the books, those cancellations were almost inconsequential. So it's not so much, while there isn't a crisis of confidence, we don't see truckers running for the exits and canceling their orders. They're looking forward saying, I don't need as many trucks as I thought I was going to need next year, and so new orders coming in are slowing, but the orders that are on the books seem to be solid.
Another point that's been made here is that the fact that the trucks are more and more automatic transmission, and that this is a key driver retention tool. What are some of the other benefits to it being automatic transmission? Obviously, it retains drivers better because they don't have to learn manual, and you can maybe pull some drivers in that you didn't have in the past. What are some of the other benefits to a fleet just to have a fleet of automatic transmission, which I think you would say is now the norm?
It is absolutely the norm. I think a couple of factors come into play there. First, with respect to maintenance, if you listen to what the transmission manufacturers have to say, there are less maintenance requirements for that automated manual, and so there's a little bit of a cost savings to be had there. The others are driver related, so obviously we have a driving population who is becoming less and less familiar with and able to operate trucks with manual transmissions. But I think that the big benefit is it opens up the potential driver pool. People that we didn't think about previously being able to get behind the wheel of a Class 8 truck now might be able to do that because there's not a skill hurdle, if you will.
What have you heard here that surprised you? There's about 150 people here in Columbus from all companies, trucking companies, equipment manufacturers, transmission manufacturers. I had lunch today with somebody from the who makes steering columns. Have you heard anything that really kind of you found notable that maybe you weren't aware of?
Each of our seminars has an overarching theme. So besides covering the economy and the individual markets, we try to zero in on what's germane to the trucking market today. And the theme this time around is technology. And to me, the most surprising thing is I think we're hearing a little bit of backing off of or backing away from the autonomous or the automated vehicle hype that has permeated not only our industry, but the passenger car and light truck industry as well. It's not that they're turning around and going the other direction, but I think folks are starting to have an appreciation for how complicated that technology is and what the challenges are going to be to put it into operation in a way that makes sense. And actually, that's an encouraging surprise because we were, I think, potentially running toward disastrous consequences if we didn't just kind of take a step back and figure out how to do this right and make it work the way that it should.
What are you hearing on the impact of tariffs, particularly for the OEMs? They maybe are spending more money for steel, more money for aluminum. I don't really know how hard the tariffs have hit actually any truck exports, but what's the buzz about tariffs here? Which while we were at the meeting, there's been a rollback in the implementation of new tariffs, so it could be different than when the meeting started and finished.
So the boys has cried wolf once again. From a direct perspective, obviously there has been a cost increase because of the tariffs, but it's not been so large that it's been a disincentive for folks to come out and purchase equipment. It has dented profitability because I think some of the manufacturers throughout the supply chain are maybe absorbing some of that cost, certainly not all of it. A good portion of it's being passed on. The bigger issue is just the uncertainty related to what are the economic impacts, and then therefore how is freight going to react. And it's the on again, off again, yes, I'm going to, no, I'm not going to, that makes that uncertainty even less comfortable.
Steve Tam, the Vice President of ACT Research, I want to thank you for joining us today on FreightWaves Radio. We're going to take a break. You are listening to FreightWaves Radio on Sirius XM Road Dog Trucking.